Hey guys, we're back with another Wednesday options positions update, and little bit of drama this week. Not too bad. Talk a little bit about emotions here. I got scared out of a call, so that's probably the biggest news of the week. Other than that, I'm waiting these next couple of days. I will be managing some trades, some in the money trades. So next week you'll see the result of those trades, and most likely I'll roll them, but we'll see. You'll just have to stay tuned. But if you're new here, what I do is share the whole week's trade. So this is from Wednesday of last week to close of market on Tuesday of this week. And I share every trade with you that I put on, every trade that I took off. So we're going to start today with closings, because that's a little bit longer than openings, and I'm going to go with the loss first instead of telling you why I opened it. So first that I closed 4 positions on the 8th, and that was one for Las Vegas Sands. Closed that one for 15 cents. So $40 in 40 days there in profit. My CCLs, I had a 12.50 and a 15 put. Closed both of those for right around $68, $69 in profit in 12 days on those two. And then ARC-G, I had sold a call. I thought we were going sideways. We had a couple of strong up days, and I figured we were going to go sideways for a while. So I sold this call, and it was a 65 call, and I was anticipating holding this for a while. And the market shot up a couple of days. I think it was Monday and Tuesday. What day was that? Well, it was the 7th and 8th, essentially. And I got spooked out, and I closed for a loss. And, you know, hindsight 2020, of course, here we are. It would have been perfectly fine a few days later. You know, this is why I don't play the call side. I get spooked out of the call side way faster than the put side. And yeah, I should probably only do the call side when I'm absolutely sure of things. You know, what I could have done was waited, and I should have waited, because, you know, when you have a couple of strong days up, typically what happens is the market kind of cools off, right? And hardly ever does things go up in a straight line. And this one caught me, because right when I sold it off and took the $175 loss in 2 days, it proceeded to go back down, and here you go. Here it is now, back down under $60, and the strike was 65. So that's ARC-G, but that's okay. I have a put at 65 as well. I'll probably be rolling that one. Zillow. Closed my Zillow put out for $46 in 31 days. This was on the 9th. Walgreens Boots, closed that one for 12 cents, $41 profit in 30 days. Alcoa, closed that one out for 27 cents, so $46 in 23 days. STNE, that's Stone. I have another one that I'll probably be managing as well, but this one came with a profit of $32 in 21 days. Altria Group, closed that one out for a profit of $38 in 20 days. And then on the 10th, I closed out 5 more positions. One in leg. I just wanted to get out of that one. $24 in 38 days. My Dutch Bros, closed that one out for $53 in 29 days. EOG, which is oil and gas, closed that one out for $38 in 14 days. And then Oxy, another oil and gas, closed that one out for $33.80 in 14 days. And then my Viatris, that one expired worthless So I kept the whole $19.32 in 7 days. And last but not least, this one was Tupperware. It wasn't expiring until this Friday, but somebody decided to early exercise me. So essentially, this put contract is complete profit. So, quote unquote profit, because I'm assigned the stock at $18. But $55 in 41 days. That's another one I'll have to start selling some puts against and some calls to try to get my cost basis down some, because we're down a few bucks on that. And that was it for closings. And now let's take a look at what we opened. We'll go down here to 12.8. And there's the ARC G. So what I did was, instead of doing the call side, I kind of replaced that call with a put that day. Went down to a 55 strike and collected $130. I have another 60 strike put that's expiring this Friday that I'll probably have to roll into this one or something. We'll see how it goes. I think it's a 65 put actually. Or is it a 60? I don't remember. Con, it's a retail store. Sold this one pretty much at the money. Got 60 cents, $60 for an 18 strike. Lemonade, that one just keeps. I got one of these expiring next week, I think, in the money. But I sold a 35 strike, got $77 for that one. SoFi, sold a pair of SoFis at 15 and 12.50. Collected about $125, 127, I believe that is, for those. And then Big Lots, did the 40 strike on it, collected $120 for those. IWM, sold a 190 strike, collected $177 on that one. KWeb, I have a KWeb expiring this Friday as well. It's close to the money, so we'll see how that works. Hopefully it just expires worthless. But I sold a 37 strike for $74. And then Workhorse. I did a Workhorse. I have a Workhorse expiring this Friday as well. I'm probably going to take assignment on those at $6. And I sold another 450 out to December 31st and collected $20 on that one. So those are all the openings. Kind of a balancing act here. Trying to balance roles, assignments, and losses with not trying to overextend myself into January too much, because that's what's happening, or that's what could happen in this situation. So just playing it by ear and taking it day by day. So let's take a look at premium cooking. So if we look at premium cooking, this is the week ending December 14th. Closed 15 positions, opened 9, realized profits at $364.15. That includes the $175 loss from the ARC G call. Sold $779.90 of new premium. So total premium cooking right now is $4,377.16. I anticipate that to grow if we need to roll these positions out. Maintenance margin coming in at $28,500, so a little bit down from last week. Buying power usage up a little bit, 24.19%. That's because there's probably there's a heavier amount of positions in the money at the moment. Cash balance went down to $119,116. That's because of those assignment of Tupperware. That was $1,800. So that's the difference there. Well, not completely different, but that's why the drop there was bigger. And net liquidation went down from $121,200 to $117,800. So we're back. We fell back to a few weeks ago levels. So the return on maintenance margin, that is the profit realized divided by last week's maintenance margin, 1.26%. And the return on net lick is the profit realized divided by the cash balance, or no, divided by the net liquidation, last week's net liquidation value of 0.3%. So there you have it. There's the premium cooking so far. Like I said, next week you're going to probably see a bunch of rolls. Is my guess, not a bunch, but at least next week you'll probably see at least 2, maybe 3. So profit realized might not be there, but cash balance might increase. Maintenance margin could potentially go up a little bit. Sometimes when you roll, you can reduce maintenance margin if you can roll down in strike price and out. So that it could either relieve or if I have to, add 2 contracts instead of 1, I'll balance it out. So I'm not looking to increase my maintenance margin very much from here. But like I said, we'll play it by ear. So stick around till next week and see what we do. All right, guys, we'll talk to you later. Thanks. Have a good week. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.